Alright, it is Wednesday night, October 24th. I'm going to do a quick run through of some charts here to show where I believe the market is and where it's heading. And we're going to look at a few different time frames and then take a brief look at Apple as well. This is the S&P 500. It's a weekly chart and it's showing a stochastics indicator here. And what you can see is the stochastics has been overbought. It's now turned down and is in a sell configuration. And even the %D line is now coming back below the 80 line, which is what I like to see for a sell signal after it gets overbought, is for the cross and then for it to come back below 80. So the best setups that will occur as far as short-term trading here are when you have this momentum pointed down, and then you get one of the shorter time frames like the hourly or daily chart to kind of recycle back up into overbought territory, and then you look to short at that point. So you're having the higher time frame current turning down, pushing the market down, and then you look to sell the rebound highs on the weaker currents in the lower time frames there. Now this is a weekly chart of the Dow, and this shows a MACD study here. And what we can see is as of the current weekly bar here, the MACD is in a sell signal. Now the week is not closed, but if it closes near the levels it is currently, we'll see the MACD enter a sell. Now that's significant, but what's even more significant is we see this relatively strong bearish divergence where the MACD is at a lower high relative to the this past spring highs. However, the price is at a higher high, and that's the type of divergence that is showing up at significant highs during the bull market, leading to 15% correction and 20+% correction there. And at the top of the last bull market there in 2007, we saw the market rally, pull back, move to a slight higher high, and make this strong bearish divergence on the MACD. So we could be, based off this signal here, at the end of a bull market move, or we could at least see a significant correction on the order of these corrections that we saw there. Now, I wanted to point out a setup that's going here on the daily chart on SPY. So if you go to a daily time frame, you can see the market has basically consolidated for over a month between this channel, support level here and resistance level there. And then what we've seen is now a gap down that went from inside the channel and then gap down through the support levels of that channel, and the Bollinger Band has expanded when it did that. Now prices close outside those bands for 2 days in a row. That is a volatile Bollinger Band setup configuration, and when you see those bands expanding like that as price is moving down and hugging that lower band, you can see some parabolic type of moves towards the downside. Now we did see that briefly in May of this year. However, we didn't see any major selling type of wipeout move. We just saw 1% declines or something on that order. However, if you go back to last year, we can see some setups that have happened relatively similar. In May and June, we saw after the high type of a channel and support level, we saw a support here and a resistance there. We saw the market gap down below this support level here, and the bands expanded when it did that, and then we saw it hug the lower band, taking it from 130.5 to 126.5 in just a matter of a few days. So not a major move there, but again, until the prices were able to pull up off that lower band and find some support or higher lows, the market was in a relative downtrend. And then we saw a similar price action with the bands here in July, where we had this rally and we had a support level here. And then what we saw is the market gap down here below that support level, and the bands expanded when it did that. And as the market then hugged that lower band, we saw increasingly cascading type of selling occur for several days prior to finding a bottom. So in the current situation, what we're really looking for here is looking for not to try and catch a falling knife in this situation, because these gains could get progressively larger in a parabolic fashion and take us down to one of these other support levels here before stabilizing and trying to rebound. So I wouldn't necessarily look to jump in long here before the market has obviously exhausted its selling and found some support. What I would suggest doing here is to, if you're short, to maintain stops above minor resistance levels and allow that market to take you down as far as it can, and wait for some more sure signs of divergence to show up before exiting that trade, or allow the market to come up and stop you out as you progressively ratchet down that stop. And this is the SPY ETF on hourly time frame, and we can see the MACD is oversold here, and managed to turn up early today, but wasn't able to follow through with any buying. And in a situation like this, obviously on a short term during the uptrend, we would expect the market to rally after low points like that. However, with the weekly time frame turning down and the daily time frame entering a volatile Bollinger Band configuration, if the market does not rebound soon here, as in within the next day or so, and the market continues to push to lower lows, that's really a sign of weakness. The market's failing to respond to the type of signal it has, and that could be another signal that we see the market really open up to the downside. Now, Apple is reporting earnings on after Thursday's close, so we may see the market make a significant move after that announcement. And I'm going to click over to a chart of Apple here. Apple's really in a significant tug of war, and what I've mentioned and highlighted over the last month or so is this 620 level in Apple here, which was the handle of a cup with handle basing pattern. It broke out on weak volume, did manage to make some gains coming up here, approximately 15% gain on the stock, and has then fallen back down and actually closed below the upper point of that handle. And what I've suggested is, if that happens, that's probably a sign of a base failure for Apple, and we may quickly see the price move down to the low of this prior base. So after closing below that level on Friday, we saw the market make this kind of frantic rebound attempt on Monday, but on lower volume, and then was immediately met with further selling on Tuesday, taking it right back down towards its lows. The lower Bollinger Band is continuing to decline there. It hasn't started to turn up, indicating that there's support under the market. And then today, after a gap up, we saw the market sell off and close lower, and the lower Bollinger Band continued to move down, and the gains came on lower volume again. So Apple is going to report tomorrow after the close, so we may see it'll be interesting to see if we see any significant price move prior to the close. But if the earnings announcement is not well received, I would guess that we may see a very significant gap down on the earnings announcement, and maybe push the market down towards these lows relatively quickly, maybe within several days to a couple weeks time frame there. So Apple being the most heavily weighted stock in the stock indexes, that could bode poorly as far as gains holding up in the stock market. So again, there's just some factors at play here that would suggest the market is at risk for some significant downside here, and that's my take on the market. We're starting to see some signs of panic selling, but it does not look like it's really come to completion yet, so I'd maintain patience if you're on the short side, and not look to jump in just yet on the long side. That's all for tonight. Have a great night.